All right, welcome back traders. In this video, I'm going to be showing you guys the different types of market structure types. Okay, so this is not going to be advanced market structure where I'm talking about, specific higher highs and higher lows. This video is just to showcase the different ways the market moves. We will go in depth during this module, but for now, I want you guys to really get the basics down so we can move on and get to the more advanced stuff. The more advanced stuff is what I use in how I'm able to get my entries and setups. So this module is so important because when you guys ask me, oh, what strategy? Liquidity, market structure, and pure price action, meaning just looking how the candles are moving, how liquidity moves, and also how market structure is actually presented. And guys, if you can get this down, and I'm not saying from the basics of this video, I'm saying this module in general, if you can get this module down and really actually understand what I'm trying to tell you guys, oh my gosh, I always say this. You're going to be very powerful. And this whole course isn't just to make you guys rich, because I'm not even rich myself. It's to provide you guys with knowledge so you guys can surpass not only me, but the people who you actually look up to. Because I believe that there's something special in each and every one of you. And I know for a fact that you guys will reach higher heights than probably me and anyone. Why? Because you are here and you are locked in. So I hope this video makes sense. And if you have to watch it a couple times, please do. You got this. Okay. So market structure types. All right, guys, the market moves in how many different ways, guys? 3. I like to define it as 3. Some people might say 4. I don't know, but we'll say 3. Okay. So we're talking bullish market structure. And I'm gonna write this down because you guys know I like to make things look good. All right, bullish market structure, right? Bearish market structure. Beautiful. Bearish market structure. For some, guys, have you ever looked at something you feel like something spelt wrong and then it just looks weird? I don't know. Today I feel like structure is looking kind of weird, but and then we have consolidation or ranging or sideways markets. So this all means the same thing. So when the markets are consolidating, some people like to say they're basically ranging. And ranging can also be defined as price ping-ponging in between some type of price at a high point and a low point. And this is why we can also define it as sideways. Okay. So let's start with bullish market structure. And remember, this is not the advanced part. This is so you guys understand the basics, because I need you guys to really understand this so you guys can understand the advanced part in this module. All right. So bullish market structure, guys. Okay. We're going to start here because bullish structure is always easy to understand. When it comes to bullish market structure, in order to get to the next step, you have to push past the previous step. And this is where my concept says highs need to be broken in a bullish market. And I want to write this down. Okay. I want to write this down because this is so important. And I feel like when I say this to people, they really sleep on what I'm actually trying to say. Okay. So I'm going to write this down. Okay. Highs need to be broken in bullish structure. Okay. Highs need to be broken in bullish structure. It's a must. If it's not broken, we aren't creating bullish structure. And do you guys notice how even in staircases in the real world, I'm like, even if you have a set of stairs in your house, do you guys notice how each step connects to that previous step? Right? It has to connect, because if it doesn't connect, you're not gonna be able to take that next step, because there's gonna be a gap in between and you're gonna lose your legs. I ain't gonna lie, you might lose a little bit more than that, you need the staircase to connect, because that is how structure is. It has to have foundation and it has to be put together, because that is how the staircase holds its structure, right? And this is the same thing that can be applied when we talk about bullish market structure. Anytime you see a level created, price is going to come back to retrace in the form of what we call these higher lows. So every time you take a new step, it's not just going to continue pushing up like this straight line here. it's gonna have to come back. So these are what we call higher lows, aka HL, right? We have a higher low here. I'm just gonna put HL. We have a higher low here, HL, and we have a higher low here. So every time price pushes up higher, all these points here, we have a high here, right? Every time price pushes up higher, it always comes back down to correct or retrace. And when I say correct or retrace, it means to reverse into the opposite direction that it's going in to basically, continue creating structure, right? And like I said, when you're walking up the stairs, your set of staircases, they have to connect to each other. They have to because that's how it holds its structure. And this is the same way bullish structure maintains its structure. It maintains it by breaking highs. Okay, so I'm going to draw this dot here, draw this next dot here, right? These highs here need to be broken, right? Highs. And this is why we say these are also called higher highs, because this is what we have a high here, right? And then we created this high here, which is now going to be a higher high. And why is this a higher high? Because it is higher than the previous high, right? Similar to how we drew our trend line here. We have price going in the uptrend direction. If you guys want to ensure that you are drawing bullish structure and you want to use a line to represent it, always make sure that you are drawing the trend line. This is called the trend line. Again, it's right here. It can be found in all the lines section, right? When you're drawing your trend line for bullish structure, you want to make sure you're drawing it at the lows. And a lot of people will just say, hey, you just have to draw it at the lows. But why do you draw it at the lows? If you have to really think about, why are you drawing a trend line for bullish structure at lows, guys? It's because we do not want lows broken in bullish structure. Because what did I just define bullish structure as, guys? I said what? Price creates higher highs, aka HH, and higher lows. If we start breaking all the lows the higher lows that price creates, right? We're breaking it. These are still considered lows, right? And if we start breaking them, wouldn't that mean that price isn't creating the higher high and higher low structure that we want? Meaning that price is no longer creating bullish structure? That's exactly what it means. And this is actually why people draw their trend lines at the bottom. Because I don't like when people just say, hey, you do this. No. What is the meaning behind what you do? When you can understand that, guys, when you can understand the meaning behind what you do, things become so much easier. Okay. And that is the goal of this course, to really give you guys knowledge on on why you do what you do, why you see what you see, because when you can understand it, your confidence just skyrockets. That being said, guys, we can see we are clearly creating bullish structure, right? If we're going to draw a staircase, okay, we have a staircase here. And I know it's not going to be like a staircase in your house where the steps are touching perfectly, but I want to show you guys the same concept, right? The same similar concept, right? We're touching here. Okay, we have a staircase. This is my ugly staircase, but that's okay. All right, just pretend this is a set of stairs. And I'm going to put this here. All right, so we have our staircase right here. Beautiful staircase, right? All these highs here. Let's go here. This is a high, right? This has to be a high. These have to be lows because these are lower than these highs, right? Good. Okay. We also have a high here. When you get used to looking at the markets, you guys will see that this is clearly a high. Okay. If you drop down onto the lower time frame, it will make so much more sense. You can see it more, right? That's also a high. There you go. All right, let's go back onto this time frame here, right? And then we have another high right here. Beautiful. And then also another one. Beautiful. All right. All these purple dots are highs, guys. And these are what we call higher highs. This high here starts as just a basic statement of saying this is a high. This is a higher high. Remember, bullish structure creates higher highs and higher lows. This is what this statement means. and this is a high, and then this is also a high. All right. That being said, guys, every time price creates a higher high, price will also create a higher low. Let me say that again. Every time price creates a higher high, higher than this high, we're going to create a higher low. And remember I told you guys that in staircases, they have to connect to create structure. These higher lows is how price connects staircases in the real world, right? How we would have a bunch of wood being together to create a step, to create the next step as well, is these higher lows representing that. And that is how structure is presented, right? We have a higher low. Then we have a higher high. Okay, every time a price creates a higher high, what is that going to be? We need to create a higher low. We need to connect the steps. We need to connect these highs here. All these highs here that we see, they need to get connected to these higher lows. So price is going to correct, test these previous highs, and then price is going to continue if we can hold at that level and respect it, right? So we have a higher low, right? And then we have what? A higher high here, and then we have another higher low. So guys, this is what bullish structure truly is, guys. And this is why you guys need to understand highs need to be broken, lows need to be respected in order to confirm that we're seeing this structure. If you can understand this before you get into the market, oh my gosh. And I know you guys might think, oh, I already know structure creates higher highs and higher lows. But then you're wondering why you got stopped out. And when you just look at structure from this standpoint, you're like, oh, wait, I understand why. Okay. I understand why we retraced from here. I understand why we're coming back here to test this level, because we have to connect the steps. We have to connect the stairs. We have to, in order to create a new higher price, in order for price to continue pushing up. And once we stop doing this, once we stop breaking highs, start breaking lows, we are doing what? We're not forming the same structure as what we're wanting to do. We're no longer creating higher highs and higher lows. Highs need to be broken, lows need to be respected in bullish structure. Please make sure you guys understand this. I know it might sound so simple, but it could be the real reason why you keep losing and losing and losing, is because you're not going back to the basics. And guys, you can analyze this on a higher time frame. Remember, the higher time frame is the same thing as the lower time frame, just literally less candles, right? It's the same thing. Now we see more candles. We're going to see more candles connect in between price, because now we have highs in between price and higher lows in between price. But it's the same concept. It's the same thing. And when we get to the advanced stuff, we're going to talk about this more in depth. Bearish market structure has to be the opposite. And why are we drawing the trend line on the top of these highs here? Because if we were to start breaking highs, guys, that would be bullish market structure. And so this trend line represents us basically understanding that in bearish market structure, we have to respect highs and we need to break lows. So as traders, as soon as we see price doing the opposite of what we need to happen structure wise, that is where we start to think, okay, price could potentially be doing what? Changing trend direction. And if we have the confirmations for that, it may be just that, right? So we draw the trend line on top of the candles because we want to make sure that we're continuing to respect highs, because price does what? It creates lower lows and lower highs. We cannot create a lower high if price starts breaking previous highs, right? Because if we're doing this, guys, if let's just say this high decides to go up here, that's breaking a previous high. That's creating, this is what? This high that was created is higher than this high. It's higher than this previous high. And I'm going to just use my demonstration. This high here is higher than this previous high. If we are higher than this previous high, doesn't that go back to my point where bullish market structure creates higher highs and higher lows? That's, this high is higher than this high. So that would be what? Bullish market structure. So we're drawing the trend line to ensure that we are staying in this structure. Okay, and this is how people can catch breakouts when price starts, impulsively going into the opposite direction just from trend lines. And that's why trend lines can also be pretty powerful. All right, so let's go back to the structure. We have lower lows and lower highs being created, right? Why? Because let's just mark all these highs, guys. Okay, bearish market structure creates lower lows and lower highs. All these dots I'm drawing are highs. These highs must be respected. Highs need to be respected and lows need to be broken in bearish market structure. I want to just point that out there. I just want to draw this, right? And all these lows here, guys, okay, we have a low here and we also have a low here. They need to be broken to create what? A lower low. Because didn't I just say that bearish market structure is defined as price creating lower lows and lower highs, aka can be represented as lower lows and lower highs. If I was to enter into a sell, does market structure make sense as to why I would get into a sell? Are we respecting previous highs or to create a lower high? When price respects previous highs, that is price creating a lower high. Okay, I need to write that down. This is so important. Oh my gosh, you have no idea. When price is respecting previous highs, that is price creating lower highs in a bearish market. And if you go back to your old trades and actually reanalyze this, actually look what's happening. Was price actually respecting highs? Was price actually breaking lows, or were you guys seeing failures to break structure, failures to create lower highs or lower lows? This is gonna be what? A lower low, aka LL, right? And every time price, creates a lower high, it needs to break the previous low that's created to create a lower low. How do you create a lower low if you're not breaking the previous low? You can't. So you need to break lows and you need to respect highs to ensure that each high that's created is lower than the previous high and each low that's created is lower than the previous low. And this represents bearish market structure. All right, that's simple. Now let's go onto the charts. Let's find some structure. All right. Remember, drawing our trend line on top of the highs. Because why? We don't want price to break highs in bearish market structure. We need price to do what? Be lower than this to create a lower high. Then we need price to start doing what? Break this previous low in order to do what? Create a lower low and continue this pattern, right? And again, back to my staircase analogy. These lower highs need to be connected, right? These lower highs is price literally connecting steps. If we were talking about the real world application, this is price connecting steps. This is price connecting steps. Let's just continue like this, okay? So, lower highs, aka LH, is price correcting, aka retracing in a bearish market. We can't just go in one direction the entire time. Price has to come back up to create some type of structure just like this, right? We have to eventually come back up to create some type of structure. So a lower high to then continue pushing down. I would love for price to just go straight to, your target area, but price has to correct. That is how structure is formed. Just like in the set of stairs, we can't just, have one step here, like one step here, all right, and a huge gap in between steps. No, you can't have gaps in between steps because structure won't hold. You won't be able to get to the next step. You won't be able to do what? Get to that next low. You won't be able to get to go lower, okay? So that is the whole concept of it. We need to create lower highs. We need to create lower lows in order to be showcasing this structure, all right? So we have a lower high here, and then we have a low. then we have a high, then we have a low, and then we look like we're going to come here. And if we, keep respecting, we're probably going to create what? A lower high. If we start breaking, that high is higher than this one, and that might be what? That might help us think, oh shoot, this is no longer creating a lower low and lower high. Price might be shifting structure. Price might be going from bearish to bullish or selling to buying. All right. So just so we all are on the same page, I want to delete these steps now that we have that analogy good. I hope y'all got it. You got it. You got it. I have faith in you guys. All right. I'm just going to delete this so we can see this from a nicer point of view. All right. And just go ahead and just practice, guys. Go on the charts and just be like, okay, what is this? What is this? What is this? Okay. Get in the habit of seeing it for yourselves and just marking it. Just do it. Put some music on and just start marking this. Okay. Get in the habit of training your eyes to see it. Okay. Now, all these are lows. This is a low here. 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 Now, you guys can see we have a high, right? We always start with a high. Then we want price to create a lower high than the previous high. Isn't this high lower? It is. So it's a lower high. Isn't this high lower? It is. So it's a lower high. Isn't this high lower? It is. So it's a lower high. Isn't this low lower? Yes, it is. This is a lower high, lower low. Isn't this low lower? It is. So it's a lower low. Isn't this low lower than this low here? Than this low over here where we just put a lower low? It is. So this is a lower low. So this is what? Bearish market structure. And if we come up here and we hold here, what is that? A lower high. Let's see if we end up doing it. Let's see. Yep. Okay. Let's see. Let's see. Let's see. Let's see. Let's see. And guys, look at this. Oh my gosh. Mamma mia. All right. All right. And this is not supposed to be the advanced part. This is just the simple what structure does. Okay. This is all we are talking about. All right. Now we can stop this. We didn't end up breaking this low here, but we did create what? A lower high. All right. Traders, sideways markets is literally what it is. Price is moving sideways. And we also call this consolidation. It basically means, okay, price does not know where it wants to go. So you know what we're going to do, because we don't know if we want to fully buy yet. We don't know if we want to fully sell yet, creating bearish structure or creating bullish structure. Like I showed you guys in the beginning, what price is going to do, it's going to start moving sideways. We're going to start ping-ponging against highs and lows, right? We're going to ping-pong, 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 until either buyers or sellers take control, right? So let's just say buyers become super strong in this level. Then we might get price shooting up and start creating more bullish structure, right? If we get sellers who gain control instead, what we might see is we might see price, just shoot down and start creating bearish market structure. Okay. So consolidation, sideways markets, or some people like to call this accumulation, because candles are really just orders, right? They're price points, right? So we're accumulating a bunch of prices to build up, orders in the market, because people are probably going to be buying and selling in between here to then do what? Do the intended move that price wants to do. Okay, so we're just going to move sideways, right? We're going to move sideways. We're going to move sideways. Yep, we're going to keep going like this. Yep, like it. Keep going, keep going, keep going, keep going, keep going, keep going, just like this. And eventually we're going to get price breaking out of this ping pong. But sideways markets is literally it's just price ping ponging. So we don't have true structure. And when I say we don't have true structure, guys, what I really mean is, you know how in bullish structure, we defined it as, okay, let me say bullish structure, bullish. When we're bullish, we create higher highs and higher lows. When we're bearish, we create lower lows and lower highs. And when I say we don't have true structure in sideways markets, we have bullish structure being presented, and we also have bearish structure being presented in a ping pong way. We have buys here, we have bullish structure here because we're going up. We have bearish structure here, so that sells, and then we go back to and then we go back to buys, right? And we go back to sells. So there's no true representation of sideways market from a standpoint of higher highs and higher lows, or lower lows and lower highs, because we get a bit of both. So you can draw some type of level at the bottom at where the lows are at. This is a low, this is a low, this is a low, and a level at the top of price. This is a high, this is high, this is high, this is high. At the highs, because this will allow you to see if price is ping-ponging. Do you guys see how we come here? Then we come down near these lows again, couldn't break. Come back to these highs, couldn't break. Come back here, creating structure in between, structure in between, structure in between. Still not breaking here, still not breaking here. Okay, we come back again. All right, still not breaking here, still not breaking here. And this is what I mean by price is just accumulating buys and sells. And price is just ping-ponging, not knowing what it wants to do. And a lot of the times people stay away from these markets or these conditions because it can be really overwhelming. Imagine getting into a buy entry here. And let's just say you decided to have your take profit, aka your target, because you guys watch my videos. If you're a newbie, you know what's up. And you have your target up here, right? You have your target all the way up here, and price just starts ping-ponging like this. You'd be kind of stressed out, right? You would be. Anyone would be, because we're just ping-ponging. We're failing to break multiple times. And when that happens, I wouldn't want to be in the trade either, because it's like, oh my gosh, when is this going to happen? It really messes with your psychology. So a lot of traders, they'll just say, you know what? Let me wait till we perform better structure. Better structure that presents either a lower low and a lower high, so bearish market structure, or a higher high and a higher low, bullish market structure, and then I will get in. So what traders do is they wait for a break either to the downside, pushing down here, or the upside, pushing down up here to get into an entry. And this is how the markets move. They will move in these three different ways. And if you can master the basics of each one of them, you will become an elite on the charts. You will become a GOAT. You're going to be goated. And when I get to the advanced market structure and finish this module, I really, really, really hope you guys understand what I'm trying to say. So traders, this is the end of this video.